Hello and welcome to this podcast. This podcast is the second in a series in which we examine the definition of gross income. In the first podcast, we had a look at what it means to be resident in South Africa, and in this podcast, we're going to look at what it means to have income from a South African source. The starting point for source is Section 9 of the Income Tax Act. Section 9 has a number of specific rules that deal with different types of income and what that source is going to be. If we have a type of income that doesn't fall within any of the rules of Section 9, we would have a look at case law and say what are the general principles of source and how do those apply to our specific scenario. Section 9 has got two sections that sort of mirror, or two subsections that sort of mirror each other. Section 9.2 deals with what is from a South African source, and Section 9.4 deals with what is not from a South African source. And essentially, Section 9.4 says for each of the Section 9.2 sections, if income does not fall within the South African source rule for that type of income, then it's not from a South African source. So there's no second bite at the cherry. If your income is not from a South African source in terms of Section 9.2, and it's a type of income that's dealt with in Section 9.2, then it's not from a South African source. So these are the rules. Section 9.2a says that all South African dividends are from a South African source. In actual fact, what it just says is that all dividends are from a South African source, but dividends are defined as South African dividends. We've got a separate definition for foreign dividends. So all South African dividends, i.e. all dividends from South African companies, are from a South African source. Section 9.2b deals with interest. And it says in deciding what source interest is from, look to the payer of the interest. Is the person paying the interest either a resident or are they using the funds in South Africa? If either of those two are true, then your interest income is from a South African source. It doesn't matter where the money is lent from, it doesn't matter where the contract is concluded, doesn't matter whether the recipient is a resident or not. We look at the person incurring the interest. The one exception to this is if the interest is incurred by a resident of South Africa, but it's incurred by a permanent establishment of that resident, and that permanent establishment is outside South Africa. Simplistically, a permanent establishment is like a branch. A branch is not a separate legal person from the person who owns the branch, but it is capable of operating independently. And it's treated almost like it's a separate person, even though in law it isn't. But excluding that exception, if a resident incurs interest, then that interest is from a South African source, and if the funds are used in South Africa, either by a resident or a non-resident, then that interest is from a South African source. Section 9.2c and 9.2d deal with royalties, and the principle is similar to that of interest. If the royalties are incurred by a resident, or the royalties are in respect of the right of use of the underlying intellectual property in South Africa, then that royalty is from a South African source. It doesn't matter where the intellectual property was initially developed, it doesn't matter who's receiving the royalties. We look at who is paying the royalties. 9.2e and 9.2f are similar. They deal with specialist knowledge, and again you look at the person receiving the specialist knowledge. Are they a resident, or are they going to use the specialist knowledge in South Africa? If either of those two are true, then the related income is from a South African source. Section 9.2g says if the income is in respect of a public office appointed by Parliament, so if we have a foreign secretary working for the South African, or appointed by the South African Parliament and working overseas, that income is still from a South African source even though they're rendering their services outside the country. 9.2h is similar. If services are rendered to the government, then income in respect to those services is from a South African source, irrespective of who renders the services and where those services are rendered. Those two, 9.2g and 9.2h, seem to make sense. If it's the South African government paying the money, it makes sense that they should be able to tax that income as well. 92I says a pension is from a South African source to the extent that the reason the recipient is entitled to the pension is due to services that they rendered in South Africa while they were employed by the person now paying them the pension. So we don't look at where the person receiving the pension is now, nor do we look at who the person paying the pension is. We look at what were the services rendered in the past that give rise to the pension now. 92J and 92K deal with disposal of property, assets. 92J says if immovable property is located in South Africa, then the proceeds on the disposal of that property is from a South African source, irrespective of where the buyer or the seller are located, irrespective of where the contract is concluded, irrespective of where the money is paid over. If the property is in South Africa, then the proceeds are from a South African source. And included in that definition are shares in property companies. So if a company owns a property, and essentially that property is the only asset of that company, it's the only thing giving value to those shares, and someone sells those shares instead of selling the underlying property, then that income will be treated according to the rules for property, immovable property, and not according to the rules for shares. So you can't get around the immovable property rules by putting your property in a company and selling the company instead of selling the property itself. 92K deals with the disposal of movable property, and it says that the disposal of movable property by a resident always gives rise to South African source income, unless that property is attributable to a permanent establishment, i.e. a branch outside of South Africa. And for non-residents, it's the opposite. The disposal of movable property by a non-resident does not give rise to South African source income unless that non-resident is selling a property attributable to a permanent establishment that's in South Africa. And 92L deals with exchange differences, and it says that all exchange differences earned or incurred by a resident are from a South African source unless attributable to a permanent establishment outside South Africa, and all exchange differences earned or incurred by a non-resident are not from a South African source, unless they're attributable to a permanent establishment inside South Africa. So that's the end of 9.2. 9.4 is the opposite to 9.2. So 9.4a says that foreign dividends are not from a South African source, and it defines what a foreign dividend is. 9.4b says that interest is not from a South African source unless it meets the requirements of 9.2b. 9.4c says royalties are not from a South African source unless they meet the requirements of 9.2c or 9.2d. 9.4d says that proceeds on the disposal of an asset is not from a South African source unless it meets the requirements of 9.2j or 9.2k. And 9.4e says exchange rate differences are not from a South African source unless they meet the requirements of section 9.2l. So section 9 has all the specific rules dealing with specific types of income. They don't have rules for every kind of income, and if there is not a rule for a specific type of income, we look to the case law principles that outline what source means and how to identify it. And the general principle comes from the case of CIR versus Lever Brothers and Unilever. And in that case, they said, look at the originating cause of the income and look at where that cause was located. And that is how you identify the source. So if you earn remuneration, salary income, look for the originating cause. The originating cause is the services you render, and look at where those services were rendered. Wherever the services were rendered, that is the source of that income. Now, services rendered, remuneration is an easy example. It is possible to have more complicated examples. For instance, what if a product is manufactured in one country, marketed in another country, sold in a third country? Which one of those activities gave rise to the income? Well, the answer in CIR versus Black is the court has told us we must look for what is the dominant cause. What is the cause that brings the most value to that income? That dominant cause and the location of that dominant cause will be the source of that income. So So that's as far as we're going to go on source. Next, we're going to have a look at the rest of the gross income definition, starting with total amount in cash or otherwise. Thanks for watching.